Today we're going to talk about meme stocks, and you may not be familiar with them, especially if you're not really involved in the investing world, but you're probably aware of some of the news that has come out recently with Dogecoin or even GameStop or AMC theaters. And if you haven't been, don't worry about it because I'm going to explain what meme stocks are, the benefits of them, and also what you need to be wary of. Okay, so let's just take the word meme right there. It's usually a viral visual that is meant to be funny, and it just sort of spreads throughout the internet, and it can become a mainstay, but there tends to be trends. Memes tend to be hooked onto certain ideas or feelings, okay? So they're more of a psychology focus, but they're usually visual. Now, meme stocks are very similar, where often you have some type of a visual with them. So it could be a logo, it could be a cryptocurrency visual itself, but a meme stock is excessive trading. It is excessive. There's another aspect of it. It's excessive trading, but it's also usually small investors. And when I say small investors, I'm using that term very generously. They're usually individuals who are not traditionally investing, meaning the individuals that are usually investing in something like a Dogecoin they're not someone that actually has a portfolio for the most part where they are really taking investing seriously. They're more gambling. So they see it more as a lottery ticket than an investment. And it's usually not heavily researched. They feel usually that just doing some quick Google searches or going on Reddit or something, they feel that that is more the space that you would research. They don't research as much into the business or long term or anything like that. And so, like I said, they traditionally do not have a strong portfolio. Now, there are exceptions because there are very wealthy people who are very well known who will know this demographic very well. And when one of these stocks is building up, or even when they plant the seed for these individuals to start buying the stock, they get rich off of them. So, for instance, say I was a billionaire, I have a following of younger individuals. Say I make a phone or a car or a pair of sneakers that everyone in that age group in the 20s, for the most part, really like 20s, early 30s. I might then say publicly, oh, I think that the I Dream of Genie bottle cryptocurrency stock is going to make it big and everyone should purchase it tomorrow morning. Well, I will be already purchasing before tomorrow morning that stock. And all of these people that don't really have a portfolio will start purchasing as well. And the minute they start purchasing and it starts going up, I would then sell my stock. And then the stock would start to drop and you would have all of these young people. Some of them will have made a lot of money, but most of them will not have made a considerable amount. And usually those types of stocks only depend on the psychology of the group, not the company. So let me go a little deeper here into understanding what a meme stock is. So a meme stock is usually something that's actually quite worthless in a lot of ways, but it's more so targeted via social networking and social media. So it's not so much like a company that has been slowly building through the years, has assets and so forth, and people are investing in the long-term focus of that business. It's usually something that is newer or struggling, and it has to be a social media frenzy basically for that stock to make money. It's very similar to a GoFundMe, but it's just a dressed up way of a company that is struggling to get some quick cash. So, for example, Dogecoin is a cryptocurrency that was actually launched as a parody, as just something funny. And because a lot of investors who are younger, who may not have a portfolio, they they often also don't have a very positive uh, risk ratio. So, meaning they might be carrying a lot of debt and they may not have many assets, and they will start dumping money into something as just like, joining in with the group. And so what happens is something like Dogecoin will go up and then it could drop. And then they have nothing. But then they feel like, well, that's the way stocks are because they don't know enough about the stock market. So meme stocks are often really coming from something that's more of a parody or fun, like Dogecoin, or a struggling business like AMC theaters, like GameStop. And the incentive for these businesses is great because if you can get a bunch of that demographic that you sell to on board with you, not only are you making money, but you're bringing a lot of awareness to your brand. So it makes a lot of sense for a struggling company, especially one that would target that demographic of the 20s and 30s to be a part of that. And the problem is that you could be helping a company get out of bankruptcy. Okay, that's for sure. But you have to look at when you're investing. So say I have $1,000 and I invested in a company that has been slowly teetering on the edge and they might be going bankrupt and now they make, $700 million because of the meme stock mentality, okay, or psychology. Now they've made this money, and on paper, or I should say not on paper, but just like looking at it, you would think that if you're an investor, like, oh, this is great. I just bought stock. They've made a lot of money. This is fantastic. But if you're really someone that looks at portfolios, you would also look at the risk ratio of how much can I afford to lose. So if you're looking at that $1,000 as like, I really need to make money on that $1,000, then you're not in the right place. If you could easily give that $1,000 to someone as a gift or a donation, fine. Then you have that space. You also need to have your portfolio so that you have a lot of assets, at least more, I would say 75% of your assets should be with less risk. Now, the reason why I'm saying this with a meme stock that is bringing a company out of a financial situation, and many companies do this, okay? Many companies do this, but with something like this, you have very high risk, very lack of stability investors. So you're not coming to the table with a lot of billionaires dumping money into your company, okay? Or millionaires dumping money into your company. You're coming to the table with a bunch of, for the most part, a bunch of people who really are not even set in their career yet, much less with a strong portfolio. So that's considered not stable. And so from the standpoint of investing, okay, so I don't mean that they are not stable. I don't want them to get offended. So that would be even, a single parent who is struggling to make ends meet is going to be a more high risk investor for your company. So when a company has a lot of investors that are very high risk, that are also really connected to the psychology of, jumping on the next bandwagon, they could easily take that money out and go to the next meme. And that's the problem with meme stocks, is that you can't count on your investors as a business. But a benefit of this is you can get quick money and you can do something with that money. Now, the problem that I see for investors, so if you are one of those meme stock purchasers, listen up. Understand that when you put money into a company that is struggling, just because it looks good on the surface that now they have a lot of money, that money does not equate to profit. And that also does not equate to, if they didn't handle money correctly before, for the past year, 5 years, 10 years, and they've been struggling and they've needed to create buzz within maybe the Reddit community or the meme stock community, it's very probable that they're not going to handle their money very well. So I don't care if they have $8 billion that they've raised, they will probably lose it pretty quickly. So if they mismanaged $5, they're going to mismanage $5 million, okay? And the problem here is it's not their money now. Now they're mismanaging your money. That's a big problem. So you have to think of investing in meme stocks as a gamble, much more so than traditional stocks. And I do believe that all stocks are a gamble in some way. In fact, I think all investing has an element of gambling to it. But the meme stock can skyrocket. I haven't had my coffee yet. Skyrocket. And that's great. But I do suggest that when you are purchasing a meme stock, and this is for anyone, this is for the new investor, this is for the savvy investor, do things a little differently with meme stocks. The minute they start to climb, I really do feel like it would be prudent for you to sell it if the company is not valuable. Because if the stock itself goes to say $80, okay, you bought it at 35 cents, it goes up to $80, you could be a millionaire overnight. You really could. But if you only put a certain amount of dollars into that, you're coming out good, but you're not coming out wealthy, okay? And well, it depends on what wealthy is for you. But bottom line is, if the company itself is not really worth it. So if last year or 6 months ago, nothing happened with this company that makes them valuable, and there are no changes, there are no reports, press releases, news coming out that this company is making big changes or buying assets that create wealth, then that $80 is going to start to plummet. So you want to sell it if the company is not making any advances towards being valuable. Now, if the company is, and, they have bought Moderna or Novavax or, like something where they are now becoming more valuable, and that $80 is just, a drop, well, then maybe hang on to it or hang on to half of it. So one thing that I like to do when I play around with meme stocks is I wait until I've maybe doubled what I've invested or tripled, and then I sell about half of it. And then at that point, I'm sort of at a break even, and now I feel like, okay, well, if it dives, it dives. I haven't lost anything, or I've made a little bit, and that's good. And then if it keeps going up, then I'm not in a problem because I'm already there. So if it keeps going up, that's great and wonderful. And then I can make that decision later on. So if it continues to rise, maybe in a month, and it has risen 75%, I still have no problem with either dumping all of it or dumping half of it and still playing around with it. So meme stocks, can they be very wealth building? Absolutely. But they're more risk building, and they're definitely risky. And I would say be very careful and do a lot of research. And if you're someone who really has only been playing around with meme stocks, I would highly suggest that you focus on a better portfolio that is more stable so that you can look at the meme stocks as more of a lottery scratch off ticket than something that you're building your whole life on, because you can really lose your life savings very quickly, especially if you're younger and you're maybe saving for a house or saving for a car or want to get rid of some debt. Investing in meme stocks could give you a quick buck, but it could also, you could be starting out at like how you were at 15 years old with a part-time job, and you don't want to be in that position. So that's my take on meme stocks, and I will talk to you soon. Bye.